Chartered Accountants Academy video lectures. My name is Davidzo Paradzai. In this video lecture, I'm going to take you through the Code of Professional Conduct, that is the CPC. This video lecture is split into 3 parts that you're supposed to watch in their correct order. Make sure you watch all 3 parts. What are our learning objectives? At the end of watching this video lecture and also going through your handbooks within the CPC, you should be able to explain the purpose of the Code of Professional Conduct, to understand the structure of the code so that you'll be able to navigate the code, describe the objectives and fundamental principles underlying the CPC. You should be able to define terms essential to understanding the CPC, explain the conceptual framework for the identification and evaluation of threats to independence and possible safeguards a professional accountant may apply. You must also be able to identify and evaluate threats to independence for specific scenarios and describe appropriate safeguards that can be implemented. Threats and safeguards in respect to the provision of non-audit services. You should also be able to describe the actions to be taken by a chartered accountant in respect of non-compliance with laws and regulations. It is essential that you go through your module together with watching this video lecture and also familiarize with the Code of Professional Conduct, which you will highlight for sections that you will need to refer to in a test or exam. So, a bit of a background. You may ask yourself, why do we need the CPC? The Code of Professional Conduct governs ethical conduct of chartered accountants. A distinguishing mark of the accounting profession is the responsibility towards the public interest. Therefore, it is a prerequisite for every chartered accountant to exercise, to have ethical culture in everything that they do. So, to whom does the code apply? It applies to all chartered accountants. And if you're still working towards becoming a chartered accountant, the CPC also applies to you. You are bound by the Code of Professional Conduct. Just a structure of the CPC, when you get a hard copy, you will find the CPC is split into 4 parts. That is part 1, complying with the code, fundamental principles and conceptual frameworks. Part 1 relates to all chartered accountants. Part 2 of the code relates to professional accountants in business. These are people working in executive positions, either a CEO, a finance director, a chief financial officer. Those people who are working in corporates, it could be commerce, industry, education sector, are bound by the CPC, and their requirements are found within part 1 of the code. Part 2 of the code relates to professional accountants in business. Retake. Sakatati. Ndongo tangidza slide. All right. A bit of a background. You may ask yourself, why do we need the CPC? The CPC governs ethical conduct of chartered accountants. This is because the profession has a distinguishing mark of responsibility towards public interest. Therefore, it is a prerequisite for every chartered accountant to exercise an ethical culture. To whom does the CPC apply? It applies to all chartered accountants. And if you're still working towards becoming a chartered accountant, the CPC also applies to you. When you get a hard copy, that is handbook, you will need to go to the CPC and have a thorough understanding of the CPC for test and exam purposes, whereby you will find the CPC comprises of 4 parts. Part 1 of the code, applicable to all chartered accountants and professional accountants, relates to complying with the code, fundamental principles, and conceptual frameworks. It takes you through compliance with the code. Then, part 2 of the code relates to professional accountants in business. So if you're faced with any matter, you should be able to tell this person who is in an ethical dilemma. Are they a professional accountant in business? Are they a professional accountant in public practice? Right? So, professional accountants in business are those people who are working in executive positions. It could be a chief executive officer, a chief financial officer, a finance director, either in commerce, industry, the education sector. They are working for corporates. It be for profit, non-profit organizations, but those are the professional accountants in business. Now, part 3 of the code relates to professional accountants in public practice. Those are your auditors, your tax experts, your technical consultants, but they are professional accountants in public practice. Part 4 of the code is split into 2 parts. Part A relates to independence for audit and review engagements. Part 4B relates to independence for assurance engagements other than audit and review engagements. So we are going to go through all 4 parts, which you should also familiarize with within your handbook. Highlight critical parts within your book so that you'll be able to navigate the CPC easily in a test or exam setup. You will find for all 4 parts, there will be an introduction to the subject matter within that part. There will be requirements that are expected of that professional accountant and application material of how to respond to any ethical issues that they will have been confronted with. So look out for the introduction, requirements, and application material. Part 1 of the code. Complying with the code, fundamental principles, and conceptual framework. Like I mentioned earlier on, part 1 relates to all professional accountants, and it runs from section 100 to section 199. You will find that in the profession, chartered accountants have a responsibility towards protecting the public interest. Therefore, they have got fundamental principles that they should possess so that the public can have confidence in the work that they produce. So these fundamental principles are essential for you to thoroughly understand, and they are outlined as follows. Integrity. A chartered accountant should be a person of integrity, being straightforward and honest in all business dealings. A person of objectivity, showing no bias, conflict of interest, or undue influence in every job that they do, in every business relationship that they are involved in. Professional competence and due care. They have to maintain professional knowledge and skill, act diligently in accordance with technical and professional standards. They also have to be people with confidentiality. Any information obtained as a result of engagement with a client should not be disclosed unless if they have proper authority. Professional behavior, because the public is looking out at this profession, they have to comply with relevant laws and regulations. They have to avoid any actions that bring discredit to the profession. Section 120 of the Code within Part 1 relates to the conceptual framework, whereby there are fundamental principles, 5 fundamental principles that I've just mentioned. As they carry out their work, they may be faced with threats to the fundamental principles. Threats to fundamental principles are those factors and events that may impair a chartered accountant's ability to comply with the fundamental principles. Something can happen that prevents a chartered accountant from complying with those 5 fundamental principles. If faced with that, what are they supposed to do? Apply safeguards to the threats. So the conceptual framework is the cornerstone of the CPC, whereby you should know that a chartered accountant should comply with fundamental principles. If faced with threats to the fundamental principles, they have to apply safeguards. So, identifying threats. You will find your module is detailed with examples of threats to fundamental principles. The threats are also 5. That is self-interest threat. A chartered accountant may have a financial or other interest within a client, within an entity that they are working with, which may impair their judgment when carrying out work. They may be faced with a self-review threat, whereby they have performed work and they also have to come and provide assurance on the same work. It's likely that they are not going to be objective as well. Advocacy threat. A chartered accountant may come in and stand in for a client's position, whereby they are an advocate for the client. There will be threats in that regard to fundamental principles. Familiarity threat. You have worked with the client for close to 9 years. You have become so familiar with them, you could become sympathetic to their position. They tell you something which is not in line with the correct application, financial reporting, and because you're sympathetic to their concerns, because you've worked together for a long time, it's likely that your judgment will be impaired, therefore posing a familiarity threat. Intimidation threat. It's a perceived or actual threat whereby a junior may feel intimidated by their superior because there is a relationship that the superior has with the client, and the junior will not stand in the correct position because they are afraid of their superiors. So these are the 5 threats to fundamental principles. Now, faced with those threats to fundamental principles, the public is looking at the professional accountant. What should they do? They should apply safeguards to the threat, whereby the CA should evaluate whether threats are at an acceptable level. What does the CA do if the threat is not at an acceptable level? They have to apply safeguards, either to reduce the threat to an acceptable level or to eliminate the threat completely. You will find we'll discuss practical examples in this regard. So safeguards are actions that can be taken by a chartered accountant to effectively reduce the effects of threats to an acceptable level. Let's attempt a practice question, because you'll find the CPC is theoretical, but in a test or exam setup, you'll be given a scenario which has triggers. When you see the triggers, you should be able to tell this relates to fundamental principles. This is a threat. I can apply safeguards in this regard. So, The practice question reads, Vakai Strong Limited, a ZSE listed entity, is considering appointing Pricewell Services, PWS, as its auditors for the 2018 financial year. PWS has 4 audit partners and 12 audit clerks. One of the audit partners is Joe Murray, the husband of Lynn Murray, CAZ, the finance director of Vakai Strong Limited. The engagement partner on this audit will be Ali Baker, a CAZ as well, who has been an audit partner at PWS for the last 10 years. Up to this point in time, PWS has been assisting Vakai Strong Limited with all their tax-related calculations, that is income tax, deferred tax, VAT, as well as the compilation of their annual financial statements. They also handle all the directors' private tax matters and have become very good friends with the directors over the years. Then the required reads, discuss with reference to the ICA's CPC the ethical conduct issues that may arise with regard to the appointment. There is a scenario there. Can you identify triggers that relate to what we have explained earlier on? You will find one of the audit partners, Joe Murray, is married to the finance director of a potential audit client. Is there any threat to fundamental principles? Could it be a self-interest threat? Familiarity threat because these two are married? Could there be an intimidation threat because the finance director is married to the audit partner who holds a significant position within the audit firm? Could the audit favor Lynn Marie because her husband is an audit partner? You are trying to think and come up with a solution which you find from the CPC to say what are the threats to the fundamental principles and can we apply any safeguards? You will also find that PWS was assisting Vakai Strong with all their tax-related calculations. Could that be self-review? When they then come to audit the financial statements, they prepared all the tax-related calculations. They actually performed the compilation of the annual financial statements. They come to audit the same financial statements. Therefore, it will pose self-review threat. Can we apply any safeguards? How about have a different team from the one that prepared the annual financial statements, a different team to come and audit those financial statements? A different team from the one that performed the tax-related calculations to come and audit. It's a safeguard to threats to fundamental principles. And over time, PWS also handles all directors' private tax matters, and they have become very good friends with the directors over the years. Familiarity threat? Over time, they have become close. When they perform the audit, will they be able to be objective when they perform private tax matters for the directors of the audit client? So the exam will come in such a way that there will be triggers that you're supposed to see. There is a marriage there. PWS was assisting Vakai Strong with all their tax-related calculations and the preparation of annual financial statements. There is a familiarity threat because of handling directors' private tax matters. I hope, given the CPC question, you'll be able to get it right. Thank you. This brings us to the end of part 1 of our video lecture on the CPC. See you in part 2 of the lecture, and make sure you listen to all three parts. Thank you.